Good afternoon, everyone. Thanks a lot for joining our webinar again today on our regular weekly webinar that we hold on Thursdays. We'll get started in a couple of minutes. So, as always, I always encourage you, if you need to grab a bite to eat really quickly or run to the bathroom or whatever it is, just do that and we'll get started in the next 90 seconds or so. All right, I'm going to call that about 90 seconds, so we'll go ahead and get started. Again, for those who just came in, thanks a lot for joining today's webinar. Preserve your hard-earned money, farmland as a safe haven for your retirement capital. We're really excited to have Chris Morris from Land Fund Partners here with us today, and I'll let Chris talk about himself in a few minutes. But before I do that, I need to do the obligatory disclosure. So as always, this webinar is meant for educational purposes only. Camoplan is not endorsing any investment or providing any investment advice. We always encourage you to go seek the counsel from the appropriate professionals, tax attorneys, wealth advisors, etc., before making any kind of investment decisions. And if you have any questions about either the presentation today that doesn't get covered, or you want to learn more about self-direction, you can always reach out to Camoplan via email or phone. So without further ado, I'm going to turn things over to you, Chris. And so go ahead and share your screen whenever you have the chance.
Okay, great.
And as you're doing that, I forgot to say one quick housekeeping item is that the chat will be turned off, but our Q&A portal will be open. So please use that when asking your questions.
Excellent. Well, thank you, Matt, and thank you, Camoplan, for having us today. Appreciate the opportunity to talk about one of my favorite subjects, farmland, and how it can help individual investors diversify their investment portfolios. Similar to Matt, quick disclaimer that this is not an offer to purchase securities. We will have some historical and projected statements in this presentation, and we encourage you to request the private placement memorandum if you're interested in learning more about Land Fund Partners in particular. We also wanted to make this presentation available for you for download. I know I personally have been sitting in webinars and taking screenshots. We're an open book. You're welcome to scan this QR code if you'd like to download a copy of today's presentation. We also have a website, landfundpartners.com, with a lot of information and FAQs if we don't get to cover a particular subject that you're interested in our short time today. And then feel free to reach out to us at the investor relations email shown on the screen. So quick rundown of what we'll hope to cover today. So we'll take 20-25 minutes to run through some slides. Please do ask questions in the chat box. We want to keep this interactive and make sure that we're addressing the questions that you have. But what I hope you will learn today is how farmland has performed as an investment over time, how it can help you diversify away even during difficult equity environments. It can be a store of value in your portfolio. Many investors refer to farmland as gold with a coupon. Why is that the case? and also some of the interesting features of owning a real asset. So the optionality of owning farmland, whether it's renewable energy, water rights, mineral rights. There are a lot of other things that come along with owning a land asset besides just leasing it out for rental revenue. As Matt mentioned, I'm Chris Morris. I'm the president of Land Fund Partners. I helped start the company back in 2013, attended Center College in Kentucky, and live in Nashville with my family. And that's where Land Fund Partners is based in Nashville, Tennessee. We started Land Fund Partners to help individual investors diversify their investments. And really, our interest in this asset class, myself, John Ferris, who's our founder, and our head of farm management, Billy Ussery, we wanted to help people diversify through because we saw what happened during the great financial crisis. Many people thought they were diversified. They had real estate, they had bonds, they had equities, and it all tended to move in the same direction. Farmland was one of those few assets that kept chugging along, and we wanted to unleash the power of that in your portfolio. Many people would consider farmland the original alternative investment. It's one of the first assets that was owned in our societies and historical cultures. And many don't know this, but Warren Buffett's first investment was actually a farm. So when he was 15 years old, he had saved enough money from his paper route and selling bubblegum and Coca-Cola that he actually bought 40 acres. This was in the 1940s. He bought 40 acres of land in Nebraska and knew that it was a finite asset. They weren't making any more of it. And even Warren Buffett, the great investing mind, recognized early on that supply and demand was an important factor in investing. So you can't make any more farmland, but the demand as the world population grows, as we find more uses for food, fuel, and fiber across the globe, that U.S. farmland was a tremendous potential investment. Farmland's often referred to as gold with a coupon. Many of you are probably familiar with gold and the tremendous performance that that asset has had over the last 12 to 24 months as the world and the markets become concerned with some of the sovereign wealth debt loads, the deficits of not just the United States, but many other developed countries. People are looking for a store of value, and gold has historically provided that. Farmland is also a store of value, right? It is a finite asset. They're not making any more of it. It has real tangible value and provides something important to the world economy. Annual income is also a feature of farmland that gold does not have. So gold has no yield. If you store gold in your basement and you come back a year later, you're still going to have that same bar of gold. Farmland, if you go and plant a crop in the spring, and even if you didn't really water it or maintain it or fertilize it, you're going to have something there in the fall. And that is something of actual tangible value. Most people with farmland, most investors lease it out to farmers. Farmers pay either a cash rent or a crop rent. But that feature of the income component is what makes farmland gold with a coupon. And that coupon has grown over time, keeping pace with inflation, also making farmland a great inflation hedge. A little on the historical performance. Again, mentioned this is one of the reasons we got into this asset class, trying to provide investors with the opportunity to own the return stream of U.S. farmland, row crop farmland in particular, from Land Fund's point of view. But you can see on this chart, through the dot-com crisis, farmland was a great store of value. And through the great financial crisis, 2007 to 09, farmland kept chugging along. Similar to the supply and demand benefits that Warren Buffett saw, a quote often attributed to Mark Twain: buy land, they're not making any more of it. We can get down in the weeds, pun intended, and talk about the minutia of farmland investing, our particular strategy. But really, if you take a 30,000 foot view, sometimes it is that simple. So a little more detail on how the correlations of farmland. So some of my fellow investment nerds that maybe in the audience will enjoy this slide. So row crop farmland, as you can see on this chart, has actually generated, this is over the last 30 years. There is a third party index that tracks farmland returns in the country. But US row crop farmland has returned over 10% annualized over the last 30 years. That's a combination of both rental income and appreciation of the actual land asset. That appreciation has been about 6%, and that cash flow portion has been about 4%. This is on a unlevered gross basis, but it's had much lower volatility than other asset classes. In fact, one of the only asset classes that has beaten farmland over the same time period is the S&P 500, but it's had significantly more volatility, more ups and downs annually in your portfolio. So, that is a really powerful component of a farmland. It would be called a low Sharpe ratio for farmland as an asset class. And looking at the data here on this chart on the right, farmland actually has almost no correlation over that 30-year period to the 10-year treasury, which is very interesting because rates really impact a lot of asset prices in our economy. But also a slight negative correlation to equities, and the largest negative correlation to the tech-heavy Nasdaq, which today would include some of the AI stocks and really hyper growth tech stocks. So there are different kinds of farmland. Not all farmland is created equal. There are various differences based on region, climate, soil type that make certain crops better in certain environments. So at Land Fund Partners, we focus on row crop farmland. So row crop farmland means that you can switch the crop annually. So the farmer can go and plant corn one year, and then they can come back the next season and they can plant, or the next year, I should say, and plant rice, and then they can transition to soybeans, and then they can transition to wheat. And that's important because it allows the farmer an opportunity when they're looking at the Chicago Futures Board and looking at their input costs and other things. They can respond to the market demands. They can have more profitable crops in certain years, and that gives them the flexibility to try to find opportunities to turn a profit in a number of different markets. That is different than permanent crop farmland. So, as the name implies, permanent crops would be things like vineyards, orchards, almond farms that are actual fruit bearing trees, generally pistachios. And once you have an almond tree that takes 3 to 10 years to grow and begin bearing fruit, it's very not cost effective to switch that crop. An almond tree is going to continue to create almonds year after year after year. One of the things that is difficult about that, you can sometimes get a higher yield out of permanent crop farmland, but you have more risk in our view because if consumer preferences change, then you are stuck with that one commodity. Vineyards are having a bit of an issue right now. This is mostly out on the West Coast. So if you think about, the wine growing regions of the United States, California, Washington, Oregon, those as younger generation has began to drink less alcohol, you've seen a decline in demand for wine grapes. And if you have a vineyard, sometimes vineyards can last 100 years, right? You can't switch that commodity. So we felt the right approach was to focus on row crop farmland, given that flexibility. And then many of you, like me, may be fans of Yellowstone. John Dutton, seen that show. So pasture, rangeland, ranches, those are also agricultural, but can be a tough business if you've watched that show. So ranching is a difficult thing to do, and Land Fund Partners, we have focused solely on row crop farmland.
Hey, Chris, could I just ask a quick question on that
Yeah.
last slide? Um, so, I am a complete noob here, so forgive me with this one. But with on the row crop farmland, with some of those crops that are there, I know like there are government subsidies provided sometimes for those. Can you talk a little bit about how, if there's any sort of changes in the political landscape that affect the productivity or the investment returns on row crop farmland, or maybe it's a non-issue?
Yeah, it's a great question, and it is an important part of why we've also focused on row crop farmland. So um, there are a number of different programs that help support farmers. Those are actually written into law. So there's one program that's called price loss coverage. So for generally for row crops, if a if the price of a commodity over an average marketing period drops below a threshold price, then the USDA automatically sends a payment to farmers to help support them on that crop for that year. There, you also see from time to time. I should also mention insurance subsidies. So farmers are able to buy private insurance, but that insurance rate is greatly subsidized by the government, so that farmers can buy about 65% of their historical revenue they can insure for free. So anytime you can buy 65 cents of insurance for $0, that's usually a good thing to purchase. And that really creates a lot of protection to the downside. So both of those programs, you tend to see there are tough years where farmers have a hard time, but usually the government programs that exist are there to create a buffer. But in the up years, the farmers are able to capture all the upside. And as a landowner, if you think about owning the land, that means that rents are very sticky, even in the down years. But then you get these really can see really big moves up when you have high inflation periods, when crop prices go up, when there's a drought in different parts of the country or other parts of the world. You capture all of that upside. So many of you, just to touch on, recent headlines. So we're recording this in October of 2025. So there's a China-U.S. trade negotiations going on, and they're working through a large number of issues, ranging from TikTok to fentanyl to soybeans. And China, in order to gain leverage in those negotiations, they have stopped acquiring soybeans from the U.S. in the short term, what we believe just to gain leverage in those negotiations, which are, again, about a number of different issues. We expect that there's going to be additional ad hoc payments. So from time to time, when certain farmers are targeted by other countries, the government has stepped in and sent additional payments. We expect that there'll be another 10 to 14 billion dollars of ad hoc payments that are sent to soybean farmers in the next few months. It's very similar to what happened in the first trade war with China in 2018, 2019. It's almost identical what's happening today.
Awesome. And I guess my just follow-up question is those did not know about the insurance subsidies programs, but both of those kinds of programs, I assume they tend to be politically uh, agnostic or resistant. Like no matter the administration, they basically maintain.
Correct. So those are written into law. The big beautiful bill actually increased a lot of those this summer, increased the amount of funding for those programs, increased the reference prices for those commodities. And if you go all the way back to the Dust Bowl, you have had consistent support in law. I believe there's actually a statute that goes back to the 1930s that even if one of these programs went away, there's other mechanisms that are really baked in a strong way to the government's legislation. So very consistent across political parties and eras, and really for now almost 100 years you've had this support because it's a national security issue. You have to be able to feed your people, and you don't want to see all of your farmers go out of business at the same time. So that's generally the justification for why these programs exist.
Awesome. Thanks for clarifying. And we actually had a question come in from Jim. And Jim said, "Land fund is collecting land rents, not growing the crops." Correct. So I think you might answer that a little bit later on. Do you want to hold on that question, or do you want to go into it now?
Yeah, no, we can go into that now. So that's a great segue. So one of the things that we do is we lease the land to farmers they pay a cash rent. There are particular strategies, and getting into land fund strategy, there are other people who actually take an operational role where they actually farm the land. It's important to note also that we do not receive any government subsidies. Land Fund Partners do not receive any government support. That 100% is paid to the farmers directly by the government, by the USDA. We do not, and our investors don't participate in those programs, except for that they support the farmers that lease the land. So, important point of clarification there. But no, we do not operate. Typically in permanent crops, you'll tend to see more direct operation as well. But we try to keep it really simple. So we want to own the land, we want to have the yield come off the land, and we want to buy really good farms that don't flood and have good soils and have good crop histories and are in high demand from various farmers in the area. So with that, so we focus on one particular area of the country for that buy and lease strategy, the Mid-South region. So these states that are highlighted in green, not only are I'm from Kentucky, so is my CEO John, our head of farm management Billy. We have 3 full-time farm managers that are all from these states. Our acquisitions vice president is from Louisiana. Our CFO is from Mississippi. So a lot of this is local relationships. As many of you know, you tend to find the best deals through word of mouth and boots on the ground. If you're just sitting and waiting for deals to come to you via email or from a broker or at an auction, you're generally not going to get the best price. So we have great relationships in this part of the country where we can source deals off market. Also, the groundwater. So when we set out to help people diversify after the great financial crisis, we knew that we had to be in a place that had groundwater. You have to have a reliable irrigation on your farms because with shifting weather patterns, climate change, and just more risk generally from more intense storms, whatever it might be, we wanted to be in a place where we knew we had a reliable groundwater. So there's an aquifer system under much of this area. It's called the Mississippi Alluvial Aquifer that has about 300 years of remaining groundwater at current rates of use and recharge. And we're actually optimistic that it could potentially be, totally sustainable with some guidelines around it. So we knew we needed water. This has a great water resource, this area of the country. And then relative value, we looked and we can still buy land at about half the price to land in the Midwest. And it really didn't make a lot of sense to us because we were like, well, we have all this water, we have really competitive farmers, we have good soils, and we also have more crop diversity. In the Midwest, a lot of times you can really just grow corn and soybeans as part of your rotation. There are some smaller specialty crops that you can grow. But we felt like this area of the country was really intriguing because you could not only grow corn and soybeans like you can in the Midwest, but also rice. Arkansas is the #1 rice producing state. Cotton has been a huge part of the crop mix in this area of the country for a long time. Peanuts, so peanuts have moved into this area. Grain, sorghum, sweet potatoes, wheat. There's just a tremendous amount of different crops. And when we're leasing the land to the farmer, we want them to have different options to be successful. It's almost like having a business where you can only sell 2 products versus you have the option to sell 5 or 6 different products. You want that crop diversity. So that's why we focused in particular on the Mid-South region of the country. So I mentioned earlier that not all farmland is created equal. We see in this area of the country, our team, we see close to $1 billion of deals a year across this area that has those key characteristics we look for. Has to have the groundwater, has to have the crop diversity. But we don't buy all of that. You can't just go and buy a farm. And you can get into issues if you have flood history or if it doesn't have good soil types, if it doesn't have crop flexibility. And a lot of times, if it has environmental issues, we check for that. So in terms of what we underwrite, it's close to a billion a year, 800 million shown on this slide. We generally send out about $100 million of offers a year. So we can very quickly get to our price because we have great relationships with the farmers in the area. So we have preferred tenants that we already know are creditworthy, that already lease land from us. And we'll actually be able to refer deals to them and say, hey, Farmer Joe, what would you lease this land for? So it's really, we can get very tight with our projections on how much cash flow these deals are going to generate. And we also have a proprietary database of over 300 market comp transactions that we've collected over the last decade in this area. So we know exactly what we should pay for these farms, and if we can't hit our price, then we just walk away. Sometimes the seller comes back a couple of years later and they realize that we made the best offer, but we'll stick to our guns and know how much we can pay. So usually what that means is we're buying 40 to 75 million of farmland in this area of the country that we're sourcing from a pretty wide network of people. We have a good reputation in this part of the country. Even local farmers will bring us deals. So it's a bit of a misconception, but people ask it a lot. Do the farmers um, compete with you to buy this land? Not necessarily. Many of the farmers that we're working with are really focused on growing commodities at the most efficient, in the most efficient manner that they can. So they want to have bigger scale of land. They want to buy the best new tractors, the best new combines, the best new cotton pickers. Seed technology is a big deal as well, input costs. So they're really focused on their farming operation and partner with us because we'll buy the land asset and then lease it to them. So another important part of our strategy. So many of you are familiar with what would be called a roll-up approach in private equity. We do a bit of a similar thing with farmland. So we have an evergreen fund, which means that we can continue to add assets and buy farms in our fund over time. And that is a big advantage because when we have existing large farms, we're able to buy what we call bolt-on transactions and attach them to existing blocks. So the picture shown here is actually an aerial from a farm that we bought in 2024. We already owned about a 1,600 acre farm. This is in Mississippi. And we had a neighboring landowner that had a 220 acre farm, was interested in selling. We had gotten in touch with them through our farm management team when we bought the initial larger property. To talk a little bit about the economics of this, that smaller farm was leased for about $197 an acre when we acquired it. It was to a different farmer. Since we already had a lot of scale and we had a larger farmer already on our land, they were paying $270 rent per acre. So we knew that by acquiring the smaller asset, we could wait for that lease to run off and bring in our new farmer, and they actually paid more rent for the whole thing. So being able to build scale really grows the value of the whole pie. And not only are you able to get an increase in NOI or cash flow on the smaller farms, but actually the entire holding.
So actually, that's kind of a good point to jump over to the Q&A. Jim had another question. Um, how are you perceived? Enemy or friend?
Uh, me is the term, right? Generally we're a friend. There are bigger funds that are gobbling up land that are much bigger than us, institutional owners that are never going to sell. Sometimes they have more of a negative reputation. If people come in and don't speak the language, so to say, try to change the deal on a seller at the last minute, get too technical with some of the legalese, that can leave a bad taste in people's mouth. But we are, proudly, we're 100% American investors. Sellers actually ask that question a lot. Where is your money coming from? So we're 100% domestic capital, and we take care of the land. We're not looking to, you know, not necessarily bring in a bigger farmer and kick someone off the land. We'll do sale leasebacks with older farmers. So a lot of times older farmers will have their equity tied up in the land and they need a buyer to unlock that equity for their family. And then we'll allow them to continue to lease the farm for up to 3 years after we acquire the property. So everyone wants to own the land, certainly, but we've done it in such a way that our farm managers, are from these communities. They play softball with the farmers. They, go to church there. It's very much a friendly relationship generally.
Awesome. And then another question from Jim. Can you speak to ABG land lease terms and default rate stability of lease prices and escalations?
I'm not familiar with AVG as an acronym.
I had
Average,
to
maybe.
I had to Google it. I got autonomous Bougainville government land lease.
I'm not familiar with that.
Okay. Oh, average. Sorry, he's average.
Okay.
Average land lease terms. Okay.
Yeah, so you generally there are lots of ways to do it. We at Land Fund tend to do shorter term leases, so usually 1 to 2 year cash leases. You can also do what's called a crop lease, where you actually own a percentage of the crop. So quite literally, the farmer will deliver the grain to the grain elevator, and when they turn it in, they will say 25% of this is due to land fund. So they sell it at that price, and then you get that money. So we don't do that generally. We do cash rents. We get 50% of the rent usually in the first quarter of the year, and then the second 50% in the fourth quarter. We require farmers to have multi-peril crop insurance. So if there is hail or other sort of damage, we are protected from that. And over our 12-year history, important to note, we have never had a farmer miss a rent payment. There have been a couple times when they've been late, but we have a 100% collection rate. We have zero vacancy because we own really good farms. We have close to 50,000 acres now in this area of the country, 14 different farmers this year, and uh, 92% irrigation. So really high quality irrigated land. You can get a lot of people that want to lease that farm. So what that's led to, at least for us, is really strong returns. So Land Fund Partners and our Soil Enrichment Fund, which is our only active vehicle accepting capital, we have generated a 17.3% net annualized return since inception. This fund launched in Q4 of 2021. And particularly 2022, I think is an important year to note, just the differences of this asset class. As many of you recall, we had 40-year high inflation that caused equities to sell off. It was also tough for bonds. Farmland, like gold, is one of those things that performs well during inflationary environments. So it's a nice diversifier. It's not for 50% of your portfolio by any means. You still need to be diversified, but farmland can play an important part. Well, I mentioned we take care of the land. The local communities also appreciate that. We're leaders in what's called regenerative agriculture. So we studied this in 2019, 2020, and we began to implement it, not necessarily because we just wanted an environmental outcome. There are positive environmental impacts. You see increases in soil carbon, you see less erosion, you conserve water usage, but really the farmers can actually be more profitable. So by doing things that take care of the soil will take care of you. So these are things like cover cropping, which is a crop that isn't for cash value, but grows all winter and provides a cover to the land so it doesn't become hard pan. No till, reduced tillage, so not tearing up the soil, uh, you know, unintentionally, to let the microbiology of that soil continue to do its thing. Reduced synthetic fertilizer applications. Biologicals are a new thing that's coming out where you're actually stimulating the biology of the soil, the microbes in the soil. So regenerative agriculture is something that's you can do a whole presentation on that. Encourage all of you to Google it or chat GPT it after this conversation. But really interesting. We're doing it now. We have at least one practice on 100% of the land in soil enrichment fund. We couldn't do any of this without our farm management team and our acquisitions team. So Billy Ussery, who's our head of farm management, Stephen Ussery, Ryan Dubach, their office is the pickup truck. So some of them like Chevy, some of them like Ford, but they're out there rolling around the Delta region and looking at the farms, overseeing improvement projects, talking to our farmers, providing them advice, and making sure that you're taking care of the land. You can go buy a farm, but if you don't go check up on it, um, you're not necessarily going to get the best results. So you really have to be hands-on. And at least in our strategy, we pride ourselves on knowing what's happening on every acre of farmland.
And Chris, I actually had a question, and Jim's asking sort of a similar question, and this is related to the previous slide with the team you had, and also the slide before that where you're talking about the regenerative uh, practices that you're implementing. So I'll just use Jim's question. Do you have these maintenance points as part of your leases, and who follows up to make sure they get done?
Yes, we require in our lease agreement that you have to use at least one regenerative practice. If a farmer doesn't want to do that, then that's okay. We'll find a different farmer. Our farm management team follows up. It actually says in the lease agreement they have to work with us by February 28th of every year, have a sit down with our farm management team and discuss the practice plan for that year. So yes, we take it seriously, and it's written into our lease agreements.
Awesome. And then there were a couple other questions that came in. I think we're gonna cover them later, but in case these two participants need to jump off, I want to get to them. One
Okay.
question is from Aisha. You talked about this a little bit already, but she asked, what range of returns have you provided to investors? Is it structured as a 3 to 5 year investment or a lifetime investment?
Yeah, so great question. There are also different models you can use to invest in farmland. There are closed-end funds where you're locked up for 5, 7, 10 years, and then you sell the farm. That's not what we do. We have an evergreen fund. So what that means to an individual investor, we would have an initial 3-year holding period, and then annually the individual investor is able to control their timeline. So they can sell their shares back to the fund on December 31st of every year after an initial 3-year holding period. In regards to what returns the investors receive, we generally make a distribution, usually once annually, that is between 2 and 4%. So that's the income component. And then the majority of our return has been driven by the appreciation of really good farmland in this area of the country and our ability to buy farms cheaply, improve them. We will do capital improvement projects. As I mentioned, we'll bring in better farmers to increase cash flow, increase scale on the properties, and the regenerative piece. So our investors have received since inception about a 17% net return, and that is inclusive of a 2 to 4% distribution piece.
And then a related question from Mark is how does land fund perform in good economic times?
Yeah, so the performance track record here, I think, would speak to some of it, right? So we've had positive returns each year, even back to 2013. So we also had some closed-end funds when we started. Those also performed well. We have never had a fund with a negative return, so can proudly say that. And our target return expectation is 15%. We believe we can continue to achieve that going forward.
Awesome. Thank you.
Great. So good questions. So gold with a coupon. So harkening back to that and what's happening right now in the market, get a little more, time sensitive to what's happening today. So farmland is a real asset, and big farms are in high demand. That remains very true, and we actually see that accelerating. So this transaction that we see here is deal in Arkansas. We own the land in green. This yellow property is being acquired by a major institutional investor that owns close to $10 billion of US farmland. There are a number of similar type of organizations that are acquiring land, uh, large, you know, large, very wealthy families. Some of the tech, billionaires you might have heard of are buying farmland. Major institutions. And why is that? Because the market sees what's happening. There's demand for real assets. There is a desire to own things that are tangible, that have a store of value, that kick off some annual cash flow, and they're not making any more of it. So that's one particular deal that we know of this year in our area. And getting into some of the optionality of farmland, we never thought we'd be talking about Elon Musk in our farmland presentations, but life is funny like that. XAI, actually, their data center where they have NVIDIA chips that are training Grok, which is the AI, is just a few miles away from some of our farms in South Memphis. Meta is building the largest data center in the world in northern Louisiana, which will use 5 gigawatts of power. I didn't know a lot about power before studying this, but it's tremendous. It's almost the amount of every household in the state of Louisiana is how much power that's going to use. So the demand for land, there are other uses for farmland besides just growing crops, and we're seeing that really creep in to the mid-south region of the country. And what do data centers need? They need a lot of energy. We have always sought to buy really good farms. We thought that initially these transmission lines were a bit of a nuisance going through the farm properties. But what has that led to today is there's a big demand from solar energy developers that want to create solar farms. And that is being driven by the massive demand from these AI data centers that need energy. So we're seeing a really rapid increase in the demand for solar energy, not just solar, but all sorts of energy. And some of our farms are now under option to become potential solar farms. The economics of those are really powerful. Uh, it equates to roughly a 4 to 5 times increase in the annual lease rate. And we're able to then sell off those assets if they become solar farms. We can make special distributions to investors. We can do 1031s inside the fund and go buy more farmland, but potentially a big upside to our investors. And that's not just to mention, not to mention mineral rights, which have always, attached to farmland. We think that water rights could become a thing. So it's not just owning land to grow the crops. That's certainly the core, but there are other uses for land that are worth noting as well. So conclusion, um, our fund is currently accepting commitments. I hope that you learned something from this presentation today about farmland investing. It is a really interesting asset class. A lot of people start dream a long runway, not just for ourselves, but for this as an investment asset class. A land fund, we buy land, we increase its value, we lease it to farmers, and then we manage it over the long term. We currently have about $362 million of land in our fund and continue to grow that with strong returns back to our investors. So don't know, Matt, if you have a question, but with
Uh,
that, yeah, go
yeah,
ahead.
two questions came in. One question was, have the immigration policies of the current administration had any impact on your investments in farmland, or is it too early to tell?
We have not seen any negative impact on our farms. I mean, talking to our farmers, usually they do require on some migrant labor, but visas. So a lot of actually South Africans are hired. which is interesting because in the southern hemisphere, the um, the growing season is the opposite, right? So they actually work all year. They'll come to the United States and help with harvest in the fall. But we have not seen any direct impacts. I know that permanent crops usually require more migrant labor, so a little more hands-on, literally. And most of the row crops are a bit more mechanized, where you have tractors that are doing tractors, combines that are doing the heavy lifting. So we have not seen or heard any major impacts.
And then another question was related to the regenerative agriculture. How do you pitch farmers on moving towards regenerative practices, and are they generally receptive, and why?
Yeah, so when we set out to uh, adopt regenerative across the whole portfolio. We were a little nervous at first. We didn't know how those conversations would go. It did take some arm twisting, but thankfully there are a number of government programs as well that will actually reimburse farmers for planting things such as a cover crop. There's a program called EQIP, which is an environmental program from the USDA that provides a lot of funding for doing these practices. So we were able to help them harness some of those existing funding sources out there that make the transition a little easier. But many of them, it's hard to do something new. Farmers take a lot of risk. Again, we're not farmers, but they grow a crop every year and outlay a lot of capital, and it's hard to try something new. But as they started to try it, they really started to see results. Anecdotally, we have a farmer who's almost 70 years old. He was farming since he was 16 years old. He would go and farm before he went to school in the morning, and he had never done a cover crop his whole life. He did a cover crop. We convinced him to do it. He thought we were crazy. And then he started doing it not only on our land, but also his family's land. So there's a lot of success stories like that where, it takes a little bit of prodding, but has generally been adopted quite well.
So you can teach an old farmer new tricks, it sounds like.
Yes, old farmers, but not old dogs.
All right, yeah. Those are all the questions. I think you were about to go into your to that QR
Yeah.
code at the bottom and close us out.
Yeah, absolutely. So thanks everyone for the great questions. Thank you, Matt and Camp Plan again. Would love for any of you who want to stay engaged. Maybe it's not a fit for you today, but you want to learn more. We'd welcome you to join our newsletter distribution list. We send those once a quarter. We won't spam you with a bunch of unnecessary information, I promise. And again, our website's a great resource. If you'd like to schedule time to talk to me or any member of our team, we're happy to set something up. And with that, uh, is all I have. So thanks everyone, and I'll turn it back over to Matt.
Thanks a lot for. Oh, sorry, there was one more question that came in from Brenda. Did our can you go over the schedule of distributions again?
Yeah, so generally we make one a year. It's generally in Q4.
Perfect. Okay. Well, thanks a lot for joining us, everyone. Chris, this was really, really fantastic. My grandfather was an almond. He had an almond orchard, so this resonates with a lot of the work that he had to do. Um,
Yeah,
but yeah, the great presentation. I learned a lot. I think everyone on the who attended learned a lot too. And for those who attended, thanks for all your questions. It's always a lot more fun to keep it as a dialogue. So thanks for your participation. If you have any questions for Chris, please don't hesitate to reach out to him. We will provide you a recording of this webinar afterward. Otherwise, we'll see you next week on the next one. So thanks a lot, Chris, and everyone have a great day.
thank you. Thanks everyone.